Hey traders, welcome back to this week's weekly Forex forecast. Now, it's called the weekly Forex forecast, but we have to start this video with this market. It's the S&P 500, and we had a massive sell-off at the end of last week. And for those of you who watched the video last Saturday, you will recall that I was talking about avoiding risk-on setups this week. Specifically, if you remember, filtering out the Japanese yen for short positions last week. And it was for this exact reason, the risk of these kind of follow-throughs and a big sell-off to the downside. And we, of course, had the tariff announcement last week. So coming into this week, the S&P 500 sell-off and the sell-off generally in the US benchmarks dominated Forex last week. We had big moves. It was, if you were focused on risk-off setups, a good week. I personally had a good week. It was another winning week in the GMT members area with the GMT real-time setups. And it was because we were doing two things. One, focusing on risk-off setups when they appear. So if we start to see this decline in equities, we can be on the right side of it rather than the wrong side of it. And being more selective, only picking the top tier setups and avoiding trying to get involved in any kind of substandard opportunities last week. So where does this leave us going into this week? Well, of course, we had the tariff announcement. There were big tariffs went up, kind of spooked the market, and we had this big two-day sell-off. And the important piece of quantitative data here is this. We are looking at this, of course, in the Hedge Dash quantitative analytics platform. We'll look at this on a rolling daily basis. Extremely oversold on a rolling daily basis. Now, why is that important? Well, because if we go back and look at the S&P 500, I've highlighted here the prior 3 times that we got this quantitative signal in the S&P 500. All 3 times were in the bear market of 2022. So there's a couple of things to take away from this. One, with this initial sell-off, it doesn't look like the tariffs are going to be removed anytime soon. Trump said that he's not going to change his policy, and China retaliated. And Trump also suggested this week that he was doing this primarily because of the refinancing coming up this year in the US. The US is looking to refinance around $9 trillion worth of debt, and they want lower interest rates. So when we combine those things, it doesn't look like this is going to go away anytime soon. But since most of the US debt is being refinanced in the first half of this year, and since this is essentially self-imposed, very much like a good analogy would be the COVID shutdowns, right? It was a manual shutdown of the economy. The sell-off was sharp, but there was that potential for that kind of V reversal once the economy was opened back up. And I think because this is self-imposed with the tariffs, and Trump can just as easily remove these tariffs as he put them on, there is actually scope at some point after the refinancing, perhaps in the back end of this year, for a kind of V-shaped recovery, assuming there's no financial crisis in the meantime. So a recession is not the same as a financial crisis. You know, this could induce a recession, but once the refinancing is done and we're coming into, you know, maybe October, September, very much like the bear market in 2022, which went through the summer and ended in October, there is, in my opinion, good reason to believe that this probably extends, you know, into the back end of the year, and then we start to see these tariffs coming off or coming down. And we could, as I said, because of that kind of mechanism of a self-imposed slowdown and then the ability to take it off quickly, we could see that kind of V-shaped recovery in equities perhaps in the back end of this year. So that's my personal view. I am kind of taking it reactively, keeping my finger on the pulse, because there's a lot of moving parts. So, you know, we don't want to get involved in predicting the future too much. But if I had to have a base case, you know, that is what it would be. So how does this affect us coming into next week? Well, a couple of things really important to pay attention to. In the 2022 bear market, the first time this happened, it was not the bottom. We actually saw another 2 major sell-offs and extremely oversold readings quantitatively before the bear market came to an end in late September. And that would suggest to me as well, especially as we're only 16% from the highs, and this is probably not going to be reversed at least until, you know, a large chunk of the refinancing is done in the first half of this year. It suggests we're probably looking at, you know, a bigger bear market unfolding in the S&P 500. So overall, I would have a bearish bias on this, but if you go back and look at the last 3 quantitative signals of extremely oversold readings or conditions in the S&P 500, they all came within 5 to 10 days of a local bottom and a bear market rally. And each of these bear market rallies, you know, you can be looking at 10%, 15% even. In fact, the third time it did it, it wasn't just a bear market rally, it was the bottom back in September of 2022. So I do think we're going to see further declines in the S&P 500, but quantitatively, the data is suggesting, and if we zoom in a bit here, you can see that the data is suggesting that we are probably near a local bottom. And I would not be surprised to see stocks gap lower, you know, maybe even sell off on Monday, or maybe push down on Monday, gap down and reverse on Monday, reversing Monday, Tuesday. And then I think that probably kickstarts, even if we retest it, you know, over the next 5 to 10 days, I think that's probably going to kickstart a bear market rally. I don't think it's going to take us back to the highs because of everything we've discussed with the refinancing and the tariffs probably staying on until later on in the year. But it does look like we are close to, quantitatively speaking, a 10% plus bounce in the S&P 500 over the next week or so. So keep that in mind, because if we are going to get a bit of risk off coming into the week and then we start to see some risk on, this is going to have a similar effect in the Forex markets. And when we go through the Forex markets in today's video, I want you to keep these equity moves in your mind, because they are going to have an effect on the Forex markets in the same way it brought risk off flows in last week. If we start to get a bear market rally, you're going to see, you know, risk on moves likely coming into Forex. Okay, so looking at the portfolio selection, we can see we still have the Swiss franc and the euro number 1 and 2. The dollar should potentially catch a bid. It started to catch a bid at the end of last week, but it's a little bit more of a tricky one, because the dollar, when you get risk off, initially sells off and then it snaps back. And it can be difficult, you know, timing the changeover from the sell-off to the snapback. So going into next week, I'm not a huge fan of the US dollar pairs. We will look at euro dollar because we look at it every single week, but certainly to the upside, the Swiss franc and the euro are my number 1 and number 2. Now, also, the third currency I like to the upside going into next week, because it's the third green currency, is the Japanese yen. Does this make sense? The Japanese yen is the most risk-off currency. If we're going to get risk-off coming into markets, then I want to be looking to be long the Japanese yen. And you might say, well, you just said that we're going to be getting risk on, you know, in markets, that the S&P is going to bounce. Wouldn't this, you know, send the Japanese yen lower if you're going to get risk on? Then you're looking to be risk off. If we get risk on, that gives the opportunity to step in and buy the dip again. In other words, if the Japanese yen sells off versus some of these other currencies because we get a bounce in equities or we get a bit of risk on, I'm using that risk on to trade risk off, to fade it, to take the opposite direction and to trade that reversal, because primarily I'm looking to trade reversals. Why? Because Forex markets spend most of their time reversing and chopping around. They don't spend most of their time making directional moves. When you have a market crash, Forex markets will move in a straight line. And if you know the announcement, like with the tariffs last Wednesday, you could just sidestep them. You can just sit out the markets, you know, when you get these catalysts and you get any kind of big directional move, you're just sitting on the sidelines. It's a little bit more tricky when you get unexpected announcements, like with the Euro fiscal rules, you know, that kind of came a bit more out of the blue. That was more difficult because then you get the moves, you might already be in a couple of trades and you end up having to risk manage them. But most of the time, the vast majority of time, these big catalysts are in the economic calendar. They're known in advance. And so like last week, I didn't have any losing trades. Why? Because when the tariff announcement came out, I was just sitting on the sidelines. I was just watching. You know, is there an opportunity to get involved, you know, after the tariff announcement rather than, you know, get involved and hold something through the tariff announcement? You know, it's very easy when this stuff is in the economic calendar, but you will, part of trading is you will always sometimes get unexpected catalysts, and that's where risk management comes in. Then you just have to risk manage it because, you know, you're on the wrong side of a catalyst. So going into next week, I do want to be long the Swiss franc. New Zealand franc was a short I took last week in real time with members. That was actually, I think, the best trade from last week. It was the best trade from last week. So we get a bounce in equities, and this brings a little bit of risk on back into Forex. What does that mean? The Swiss franc will probably soften. It will probably sell off a bit. On a rolling daily basis, the Swiss franc is overbought. It's not extremely overbought, but it's overbought. So I'm anticipating a pullback in the Swiss franc. So a bit of weakness in the Swiss franc. You know, I'm not saying it has to go up in a straight line. I'm looking for the Swiss franc to weaken so I can step in and buy it, you know, after it weakens primarily. So those are the three currencies I'll be looking at to the long side going into next week. And all three of those, well, the Japanese yen and the Swiss franc are risk off currencies and they're safe haven currencies. And the euro is not really a safe haven currency. You know, it tends to go down against the yen, against the franc, and also the dollar. But versus the commodity currencies, the Aussie, the New Zealand, and especially the CAD, the euro acts as a safe haven currency. In other words, euro CAD should go up, euro New Zealand should go up, euro Aussie should go up in risk off. And, you know, again, think of it in terms of what we looked at in the S&P 500. We might get some risk on, but overall we're looking to be risk off, or at least looking to be trading in the direction of risk off. Because if we get a small bounce instead of a big bounce and the market rolls over, we're still on the right side of it because we're only trading those risk off setups, right? So even if we get a bit of risk on and a bounce, I will be looking just at fading that, only looking at risk off setup. So risk off next week would be Aussie franc to the downside, 5% move last week, probably needs to pause and bounce. If it does bounce, I'll just reshort it, or I'll short it again. I didn't short it last week, I shorted New Zealand franc, but I would, looked for a new short in Aussie franc and a re-long or a rebuying of the Swiss franc. Short New Zealand franc, you're shorting New Zealand dollar, buying the Swiss franc. So we'll be looking for that next week. The New Zealand dollar versus the Swiss franc as well, again, which traded last week, but again, we get a bounce, it sells off, we get a bounce, that I was shorted again. I'm just looking for another short from above the upper bound last week. And notice, we had tariff announcement, we wicked the upper bound in New Zealand franc last week, and then we reversed. That was where the reversal came last week. The reversal came from the weekly upper bound. So I'll be looking for that again. And the third one here is not going to be the dollar. Because yes, the dollar is kind of a little bit weak, but it's at risk of snapping back and seeing a bid on a flight to safety. If that's the case, I don't really want to be short dollars. I'd much rather be short the pound. So I will be looking at the pound as well, and the pound should go down even against the euro in risk off, in overall risk off. So in other words, I'm going to be looking going into this week, Aussie franc to the downside, EurAusd to the upside, and Aussie yen to the downside. Going to be looking at New Zealand franc to the downside once again, Euro New Zealand to the upside, and New Zealand yen to the downside. And I'm also going to be looking at pound franc to the downside, Euro pound to the upside, and also pound yen to the downside. And if we do get a bit of risk on coming into equities, and this brings some risk on into Forex, I'm simply looking to fade those moves, take the opposite direction, and use the pullbacks or the dips to get involved in the direction of risk off. Okay, so kicking off the watch list as always with crude oil, and last week I highlighted this major bearish pattern in crude oil, technical descending triangle pattern, and we have a price target of roughly $40 a barrel. When are you going to see a major technical breakout in crude oil where it drops $20, $30 per barrel and ends up down around, $40 or $30 a barrel? You're going to see that during a recession or during a bear market in equities. So the technicals of crude oil seem to be confirming that fundamental outlook of potentially a recession in the US induced by essentially the raising of taxes. That's basically what's happened, increasing taxes on the fiscal side. This is deflationary, causes a near-term recession. I'm not convinced there will be a financial crisis. I think it's just likely to induce a recession. And that recession probably, because it's caused by the raising of taxes, can be just as quickly on the fiscal side shut off and kick-started again. In other words, the US economy kick-started again. But for the time being, if they're going to keep tariffs on at least to the back end of the year while they get the refinancing done at lower interest rates, because of course bonds are going up on a flight to safety, this pushes interest rates down. It does look like we have further downside in crude oil, and I did say in last week's video I do not want to buy crude oil because of the risk of this pattern breaking. That's exactly what we saw last week. Okay, so dropping down to the 4-hour chart, I can either short this market next week or do nothing. Exactly the same as last week. I cannot buy this market for reasons discussed, this big technical breakout pattern. If we are making our way down towards $40 a barrel or lower, I only want to be short this, and if we can get a pullback next week, get a bit of a risk on bounce maybe in equities or start to stall out, and we see crude oil pulling back into the sell zone, which is between this blue level and this gold level, because this level is where we quantitatively become, once we trade above it, overbought during the week. So I'm looking for those kind of reversals intra-week or during the week. And if we trade above the gold level, we're extremely overbought, and you should expect that to happen roughly 5% of the time. So most of the time we're not trading above the gold level. Most of the time we're trading either not trading above these levels at all, or if we do get some volatility, trading into this sell zone. And of course, this is the buy zone. But if I'm only looking to be short, the buy zone just becomes a profit taking zone. I can't really step in and buy down here because I can't buy this asset. So if this pulls back and breaches the 66.09 reactively, I'm going to start to look left to see if there's an opportunity for market to trade into resistance, start to fail, and then that liquidation back inside the range is what I'll be looking to capture. So above the 66.09, we become overbought during the week. We also have the 67.81, which is the low of the descending triangle pattern. So I would not be surprised to see this pull back, enter the sell zone, and trade into the 67.81. This would be a great place to look for buyers to attempt to break through the bottom of the pattern, to stall out, and then again you get that 1 or 2 day liquidation back inside the range. That's what I'll be looking for primarily. If we do pull back, we trade above the moving average, we get close to the upper bound, but we fail to test it, In other words, we get a fast market and you end up with a re-break back down below. The moving average follows it. You can look for that first pullback into the moving average. And that sets up a nice bear flag opportunity down to, in this case, the 58.54, great profit taking zone for any intra-week shorts in crude oil next week. If we end up above the 69.86, we become extremely overbought during the week. Not necessarily likely to happen, but the markets are so volatile, it has a higher chance of happening. This is the second place I can, if I so wish, pull the trigger on a second short position. If I'm already short from down here, I can short it again above the 69.86. Or if I'm not already short and it trades above there, I can just pull the trigger on an initial short to the downside. Okay, so kicking off the Forex markets with the Swiss franc pair, starting with Aussie franc. This was a monumental sell-off last week, nearly 5% down. Very often, that's the kind of move you might expect in a month, let alone just in one day. And this is a market that overall I want to be looking to the short side. But if we are going to get a near-term bottom over the next week or so in equities, I would suggest that Aussie franc also needs to pause and correct, even if it's going to go lower, because this sell-off is massive. So I do think we're going to get a bounce to the upside next week. We may get the sell-off first. If it comes down, takes out the prior low and enters the buy zone, because it's so extended and such a big sell-off to the downside, you could, if you have the stomach for it, step in and attempt a near-term reversal, because it looks like that's going to come. However, the difficulty is if you mistime it, it can be a bit volatile. So if you're proficient with stuff like that, maybe you can look at it. Otherwise, the safer opportunity will be to wait for the pullback into the sell zone, which is the 0.5265. Now, I will give you one word of warning that this sell-off is so steep that it would not surprise me if this ended up pulling all the way back to its second upper bound. Super volatile down, super volatile up. So if we do get a pullback to the 0.52655, what I would say is there's nothing to the left-hand side to look at in terms of resistance. You really need to make sure that the market is stalling out. So we trade above the 0.52655. You want to see momentum fading. You ideally want to see the moving average coming down as well, maybe offering some dynamic resistance. Okay, and then you could look for that 1 or 2 day reversal back inside the range. It may, just to clear this off a little bit, pull back like this above the upper bound. And if there's no real bearish reversal pattern like a double top or a head and shoulders on the lower time frame, so 1 hour, 5 minutes, 1 minute, then you need to be careful that this doesn't just push all the way through and snap back to the second upper bound. So I'll be looking at this next week to see if we start to get those patterns in this area. If we trade straight through and there's no trade down in this area, above the 0.5331 would be a good place to start to look for a 1 or 2 day reversal to the downside in Aussie franc. So volatile market, it's not for the faint of heart. Nothing wrong with just leaving these out if you don't want to trade volatile markets, but that is what I'll personally be looking for in real time with GMT members next week. Next is New Zealand franc. We traded right into the upper bound, the weekly upper bound last week. Same with crude oil. Crude oil, where did that massive reversal come from? It came from the weekly upper bound last week. We tested the weekly upper bound and then it reversed to the downside. So I would be looking for a reshort or another short in New Zealand franc going into next week. Again, the same thing applies with Aussie franc, whereby I would not be surprised this snaps back so hard it hits the second upper bound. Just bear in mind, we also have a New Zealand interest rate decision next week. They are expected to cut rates, so there's nothing wrong as well with waiting until after the RMBZ next week in order to get involved in these. I would imagine we're looking at potential interest rate cut next week, but I would imagine we're going to see a similar thing, whether before the interest rate decision or after that. If you get a push down and a test of the lower bound, that probably is going to be the start of a bigger snapback. Again, if you've got the stomach for it, and if you're proficient enough to time those things, you could look at a counter trend trade, but it's risky. You don't have to trade it. You don't want to trade it. You want to play it safe, just sidestep it. Wait for the pullback. And once we trade above the 0.48792, this is where I'll begin to look. There's nothing to the left-hand side to look at because it's such a steep move. But do we start to get momentum fading? Do we start to see a double top or head and shoulders forming? That would be the sign to look for that liquidation back inside the range. The same setup I'm looking for, week in, week out, and get week in, week out. It happens every single week, usually on multiple pairs, and assets if you're looking at stocks and everything else as well. So if we can get that, that would be great. Again, I would be careful though. If we blast through here and all I see is a straight line up like this, I'm going to wait. And if the following day it just pushes straight up again, then, I'm going to start to look for the double top or the reversal pattern from above the second weekly upper bound. And that is where I'd be looking for 1 or 2 day liquidation. Intra-week trading this thing is probably going to be difficult because it's very volatile, and it's a short, but it's so overextended that if you try and intra-week trade it, this could just easily snap back in your face at the second upper bound next week. And the final franc pair is pound franc. I really want to be shorting this market, but it's such a big sell-off again. If we do come down at the beginning of the week, especially if we test the lower bound, it would not surprise me if that was the bottom, that would form a bottom, because this is so overextended. It has to pause. Even crashing markets have to pause, have to breathe. Go back and look at 08 in the stock market. It wasn't a straight line down. COVID was the closest to it, but it wasn't a straight line down. So I would much prefer to be on the short side. If you are proficient and you think you can trade that double bottom, any move in this area, you could look for that. But to be on the safe side, I'd be waiting. Preferably, the best setup would be a pullback above the 1.12331. You can look left, and in this case, we do have some key areas of support over here which can turn resistance. So we push through here about halfway up. I would be looking in this area. As we start to trade into these lows, can we get buyers stalling out? I want to see the momentum lacking first. I'm not just jumping in the moment this hits the upper bound. And then once momentum starts to fade, taking the other side of that position, that's the 1 or 2 day liquidation that I'm trying to capture. So looking to capture, each asset moves 5 days in a week. I'm looking to capture 1 to 2 of those days out of 5, in each asset. So, I might do that in 3, 4, or 5 different assets, right? Or more. So that's what I'm looking to capture. If we end up blasting all the way through to the second upper bound at the 1.13652, and again, this is where momentum comes into play. So if you pull back and you snap back and you take out the upper bound and it's just a straight line, nothing's happening. You might wait and then you continue to straight line, and then in this area you start to stall out, right? Like that's when you're going to sidestep that first short, and you're going to end up shorting it from above the second upper bound. Make sense? That's the second place I can look for a short next week. Again, I probably wouldn't bother with intra-week stuff because if you short it, this thing can snap back in your face. And, if you try and buy it intra-week, we could easily have another leg down into the low. So intra-week trading that is going to be difficult next week. Okay, so moving on to the euro pairs, starting with euro dollar. Now I'm looking overall to be long the euro vis-a-vis the other currencies highlighted in today's video. However, versus the dollar, even though the dollar is a bit weaker, I'm concerned about that snapback, because if we keep getting risk off coming into markets and we are going into a bigger bear market, this is likely going to, at some point fairly soon, bring buying into the dollar. So even though I'm looking to be long euro overall versus other currencies, given the chance, I would prefer to short it. It's not my favorite setup, but on balance, I would prefer to short euro dollar. And actually I shorted this last week in real time successfully with GMT members in the members area. And if we can take out especially the highs, I would probably look at shorting this again. We also have CPI on Wednesday, so just bear in mind we might actually get some moves into Wednesday, and then the CPI report could cause a snapback. So if you are looking to time some bottoms or some counter trend moves, CPI on Wednesday could be a good catalyst to do that with. So what I'd like to see is I would really like to see this market pushing back. This would be near-term risk on, because risk on pushes euro dollar up, risk off pushes euro dollar down. If we start to get a bit of a bottom in stocks and we bounce and we start to push above the 1.10762, there's a prior high over here and there's a prior high here. These are the highs I would be looking at for a potential reshort in euro dollar for a 1 or 2 day liquidation back inside the range. Wouldn't bother intra-week trading this because of just how the markets are currently, so I wouldn't want to even attempt to trade between the ranges in this next week. The second place I can pull the trigger. Let's say we blast straight through the prior highs, especially into CPI. And I think to myself, I don't really want to take a trade, maybe before CPI and euro dollar, so I leave it. It goes through the first upper bound into the second. This would be the second place. Perhaps we get a fairly bad CPI print or a high CPI print, and that causes a pop higher in the dollar, right? And euro dollar is trading in this area just before CPI. So this is the second place above the 1.11898. I can look for a short position for a 1 or 2 day liquidation, and that would be back inside the bigger range in that case. Next is EurAusd again. I can really only be a buyer or do nothing, but we're in a very unique situation where this is so extended, you could, in this scenario, potentially attempt the counter trend move like with the Swiss franc pairs. Again, that's entirely up to you. The primary opportunity I would be looking for, if we do push higher and we take out the 1.83339 and you want to take the odds on, that is a setup for the counter trend move because we need to pause and correct. If we pull back though, very much like the Swiss franc pairs, make sure you're looking for momentum to fade because this move up is so volatile that the move back could be volatile. And again, I would not be surprised to see these pulling back and hitting second weekly lower bounds just because of how volatile the markets are at the moment. So I will be looking if we take out the 1.7944. If we go straight through it, I'll be looking down here. But let's say we come down and we start to fade. We start seeing momentum fading. Sellers start to book profits and they're second guessing themselves and it gets choppy. That would be the precursor for a potential reversal, double bottom, inverse head and shoulders on the lower time frames back inside the range for a 1 or 2 day liquidation. If we blast straight through and take out the 1.7749, especially if the moving average starts to catch up and we get dynamic support, that would be the second place. If we start seeing momentum fading, I could pull the trigger on a long position. Not interested in intra-week trading any of these, far too volatile for me to be trading between the ranges. I think you could easily get yourself on the wrong side of a bigger move, trading between the ranges in these next week. Next is Euro New Zealand. We had a monster move up. And again, if we push higher at the beginning of the week, Monday into Tuesday, and we take out the upper bound at the 1.9801, you could potentially take the odds on, but it's a counter trend trade, more risky. The safer trade would be to look for a pullback below the 1.9368. If we start to stall out, and again, the problem is there's nothing to the left-hand side to help it stall out. But if we start to stall out, and we start to form a bottoming pattern on the lower time frames, I will be looking for a 1 or 2 day liquidation back inside the range. If we go straight through and we straight line, look at the prior high right here. If we go straight through without any lack of momentum and we just get momentum after momentum and we hit the 1.91514, this would be a great place. If it's a volatile snapback next week, this would be a great place to look for, again, momentum to fade, a test of the prior high, the stair step, and a 1 or 2 day liquidation back inside the bigger range. Again, not interested in trading this between the range next week. And the final euro pair is euro pound. I probably, again, if we take out the upper bound at the beginning of the week and you want to take the odds on for a counter trend trade, it's more risky, but it's probably there. The safer trade would be to wait for the pullback. We have a prior high right at the lower bound. So we trade below the 0.84398. We become oversold during the week in a market I'm looking for buying opportunities, and we hit and stair step a prior high. This is going to be a great place to look for those double bottoms, inverse head and shoulders, and looking for that 1 or 2 day liquidation back inside the range. If we end up, I'm not sure that this will happen in this market, but if we do end up, below the 0.83825, this is the second place. I can look for a 1 or 2 day liquidation back inside the range, if momentum starts to slow. Intra-week trading, once again, not interested. Trading between the ranges next week is, in my opinion, going to be difficult. And finally, the yen pairs before moving on to gold and silver, starting with Aussie yen. Now, I can either be short or do nothing. I wouldn't probably look for the counter trend trades in the yen pairs. Of all the pairs, if risk off is going to kick in, the yen pairs are going to appreciate against everything. So these are even more risky, to counter trend trade. So for me personally, I wouldn't want to trade this between the levels either. I'd like to see this pull back, breaching the 90.23, and I'm going to look. Do we start to run out of steam and form a double top, head and shoulders? If so, looking for that 1 or 2 day liquidation. If we don't and we blast straight through above the 91.66 and these prior lows here, this is where I would be looking next week, again, for momentum to fade, for buyers to start to trade into these lows, pull their positions, and for that 1 or 2 day liquidation. Next in New Zealand yen, looking for exactly the same thing. I can be short or do nothing. Buying this is not an option for me next week. Perhaps wait until after the interest rate decision next week. And if we get that snapback, we get the, maybe they don't cut rates, but whatever happens, let's say we get the pullback and we get the move into the 83.52, regardless of the reason. The reason actually is less important. If we get the move back into this area, this is where I'm going to begin to look. We do have prior lows to the left, which is great because this is where we can, look to pull back, test, and start to run out of steam. It's a reason why buyers could trade into this sell zone and also have an additional reason to run out of steam. If we see that, I am going to be looking for 1 or 2 day reversal probably after the interest rate decision next week. If we blast straight through and I do not see the momentum, I do not see buyers struggling to push this higher, and in fact I just see this kind of straight line, then the next place I'd be looking for potential short would be above the 84.84. Very unlikely we're going to go much past that. I don't even think we will necessarily test the upper bounds in these markets. They're not as oversold as, say, the franc pairs. So only looking for shorts in the yen pairs next week. In other words, buying the yen, versus these commodity currencies. And finally, we have pound yen. I can either be short or do nothing. What I want to see next week is I want to see this market pull back. There's a really nice prior low over here. We pull back, we stair step the prior low, we enter the sell zone above the 192.27. This is where I'm going to begin to look for momentum to fade, and I'm going to be looking for that 1 or 2 day liquidation. You could probably hold on to these a little bit longer because of the overall risk off. But if we come down, and I get 1 or 2 days, I'm going to be looking to book my profits, because maybe we come back up and we retest it the following week, and then I short it again. So that's what I'm going to be looking for in the yen pairs. I do not want to try and counter trend trade these or trade between the ranges in these next week. Wrapping up the video then, as we always do, with gold and silver, starting with gold. Now, out of gold and silver, we have this kind of difficulty where the dollar is selling off, but it's very close to or at risk of catching a bid. So although at the moment you look at the dollar and it's kind of weak, and it's even quantitatively quite weak, I want to almost kind of trade in the direction of risk off, just like last week, kind of filtering out the yen shorts. I really want to filter out dollar shorts this week. So that means I have a short bias in both gold and silver, and out of the two of them, I do think silver is the better short. But if gold pulls back, and I'm not a huge fan of gold shorts anyway, there's nothing wrong with just sitting these out. If they do pull back, you don't have to short them. There's other opportunities. There's always plenty of opportunities, especially in Forex. But if we trade above the 3,100, I will look left. I will consider potentially, are we going to get this lower high? And if we start to see momentum fading, looking for that 1 or 2 day reversal to the downside. Again, I don't want to trade between the ranges next week in really any of these pairs. If you want to do that, it's entirely up to you if you've got that strategy, but not for me. If we push all the way through and take out the prior high, again, I would consider this would be the second place I could pull the trigger on a short. But at that point, we've made a new high. That's actually a trend continuation. So I'm unlikely to pull the trigger on this unless I've already got a short and I'm risk managing it. So gold, not a fantastic one now for me next week. I like this to the upside when it was running. Shorts in gold, not a huge fan, but on balance, that's the opportunity I would go with. And last but not least, we have silver. Now, I can either be short or do nothing. Cannot buy this market next week. And it's so overextended. This move was such a monster sell-off that, again, I would not be totally shocked to see this come back and hit the second weekly upper bound, just purely on volatility down, volatility up. So if we do get a pullback, once we trade above the 30.63, I can begin to look. There's a prior low over here. Can we get confluence in the sell zone where we start to run out of steam? Maybe the moving average catches up with it, and then we find dynamic resistance, and then we start to sell off for 1 or 2 days. I will be looking for that, but being cautious in the sense that if we trade above the 30.63 and on the lower time frames we're doing this, there's no reversal pattern there. I'm going to be looking, if the second upper bound is here, do we get continued momentum? If we do, there's no opportunity. And then we hit here, and then we attempt, and it kind of does something like this. Then I'm looking to pull the trigger from above the 31.68. So I will be looking for momentum to fade in either case, whether we become overbought or extremely overbought. Just bear in mind, markets are likely to remain volatile next week. And so if you are trading next week, remember just take the best setups, and you're probably going to be better served only trading in the direction of risk off. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.